All right, welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Thanks for coming in. Good to see you.
Good to be here.
All right, we have our question all ready to go. My tax person told me to buy an IRA this year, and it would help me on my taxes. What does that mean, and how do I buy one? All right, so what does it mean? Back up and tell people who aren't aware how they work. What is an IRA to begin with?
Individual retirement account. It's basically a tool that you use to invest money. So, you want to open it on your own. So you can go and buy, like if you're in a rush and you need an IRA for taxes, you just go to your bank, tell them you need to open an IRA, and they'll help get that done. Now, you can put in the IRA any amount of money you want, so up to a limit, all right? So let's say that your tax guy says, if you buy an IRA, it'll help you save some money on your taxes. So let's just use little numbers. So if you put $1,000 in an IRA and you're in a 15% tax bracket, it'll save you 15% or $150. So it would either increase your return or reduce the amount of taxes that you owe. So another thing to remember, an IRA is not an investment in itself. It's just the bucket that you use to put your money in whatever investment that you choose. Might be stocks, might be a mutual fund or bonds, or it could be a bank savings CD IRA, could be an annuity with an insurance company. There's all kinds of things you can buy. Gold IRAs are a big thing now. People are thinking, I can go do that. So that is just the tool that you put your investment in.
Okay, and the bank or wherever you go can actually help you decide what may be the best one for you?
Sure. If you go ask an expert, then they'll direct you based on what you're interested in purchasing. Now, you got to remember, an individual retirement account focuses on retirement.
Yes.
So if you're 25 years old and you put $5,000, your maximum contribution into your IRA, you got to understand, you can't touch that money until after 59 and a half, or you're going to have a big tax penalty.
Which is good and bad.
Well,
because if you can't get your hands on it, but if you put your hands on it, you pay a pretty big penalty.
That's right.
You're ready for that.
There's contribution limits. 5,500, is the minimum contribution if you're under age 50. If you're above age 50, they allow you a $1,000 catch-up, so you can put 6,500 in a traditional or a Roth IRA.
Okay.
Now, SEP IRAs and simple IRAs, not to bog down in all this, those are more for the self-employed people that are working, that they want to put like a SEP IRA, 25% of their adjusted gross income up to a maximum of $53,000. So you could do that, or a simple IRA for self-employed people, $12,500 up to $15,500 above age 50.
So maybe you could do that if you don't have like a 401k or something. You're self-employed.
That's right, and that's what we also got to know. There's phase out for excess earnings. So if you make too much money, there's not a lot of benefits to contributing to an IRA. If you're participating in a qualified plan at work, then you're going to be limited as to what you can do on your own with an individual IRA. They have limitations and things like that. So the 59 and a half rule is the big thing that people need to remember. You do not have to put the maximum contribution in.
Right.
You can put any denomination under that in order to get benefits. But remember, if you make too much money and you put money in an IRA, it's still restricted and you don't get the tax benefits. So there's probably alternate investments that would be better than putting it in an IRA.
That was what I was going to ask you, is who is the IRA not good for? And it could be the really, really high earners. It might not do you a whole lot of good.
Right. High earners that don't really or aren't looking for an additional tax deduction and things like that. It's not going to benefit them. Now, if you're making $25,000 a year and you need to put a little bit of money away for retirement, it's a great tool. If you're paying $1,000 in taxes and you want to try to save as much as you can, put contribution in an IRA and it'll help reduce your tax burden. But then you got to remember, not only do you have to pay your taxes, but you got to part with the money to buy the IRA.